My name is Yuri. In this video I will show you how you can trade intraday and what's the difference between swing trading and intraday trading. Because for some of you, I know it's important to trade intraday because you want to open more entries, but for a start I want to tell you success in trading does not matter how much entries you make. As if you don't have a huge correlation, you do more entries, you have more money, because sometimes you can have 2 entries per month to trade, and you can earn more money than someone who will have 20 or 50 entries, because accuracy is far more important than quantity. Difference between swing trading and intraday. Intraday, it is when you open entry inside one day. Swing when you hold some position for a few days. About intraday, what is advantages of this strategy? First, you don't need to hold position. If you earn money, you do it quickly. What is negative of that side? Sometimes you will do overtrade. Sometimes you will trade because you don't need to trade, and sometimes you will do that mistakes to just open entry because you need to open entries. That's all. That's why better to trade only accurate patterns on intraday strategy. At this moment I will show you my best trading pattern, which I personally love to trade intraday when I see it, because mostly I trade key levels on a daily chart, and mostly it is for a swing, for some to hold for a few days. But sometimes price can show us to us really accurate intraday entry, and when I see it, I open it and also share it with my VIP members and everyone who can see it. That's why for you, let's start real examples. Right now I'll show you how to trade it properly, how to find it, how to open entries, how to set stop losses. Everything will be in this video. Okay, let's go, friends. First, about intraday, for me the best is to trade mirror levels because they really accurate. I want to show you some examples on different instruments on different markets. For you it will be easier to understand that. Few seconds, friends. I would like to start from oil, because oil a few days ago showed really good intraday signal, intraday entry. For me, the best to trade intraday when I trade mirror levels. When I trade mirror levels even on 30 minutes chart. When you trade intraday, I recommend to use 1 hour to build key levels on 1 hour 30 minutes, not less, because when you use 15 minutes something lower, you will not have really accurate levels. First, how I trade how I trade intraday. First, I trade mirror levels, really powerful mirror levels with low risk and good potential reward. How can you find a mirror level? Mirror level, it is a place from which price which was resistant. And take a look here. I love such example because take a look, before price break this key level, price bounced from it. And take a look here, also from this place price made this drop down, and it was more than 200 pips. That's why for me it is an accurate key level. And when you will open some higher time frame, you will see that, for example, like here, price made a false breakout. How to trade it? First, on 1 hour chart or something like that, I'm looking for a key level, for mirror key level. Few examples how it looks. Few examples how it looks. Few seconds, friends, someone is calling to me. A few examples like here. How we can trade false breakout according to mirror level strategy. First, we need to find a key level, mirror, for example. How it looks schematically. Price broke mirror level, and after that, when price do a pullback on a false breakout, you open entry. You open entry nearly this key level. You set stop loss below tail, or you set technical stop loss. On oil, for example, like here, I recommend to use at least 20 pips stop loss, or 15 pips, not less. Few seconds. Yes, it's here. like here, before this tail price 20 pips. As you see, for such instruments, it's really very low stop loss. First, how to set stop loss below tail. Second, you can use mathematical stop loss, for example, 10% of average daily move. For example, gold moves per day 220 pips. That's your stop loss. Mathematical stop loss will be 22 pips. Oil approximately at this moment has ATR 150 pips. That's why your stop loss 15 pips, something like that. You can have such low stop loss only when you open a position in proper place. Only in that case. That's why once more for you how to trade mirror levels intraday. First, you should find an accurate key level from which price bounced. As you see, it is mirror level. After that, price broke it up and made a pullback, made false breakout on a pullback. And after false breakout, you open buy entry, set stop loss below tail or use mathematical stop loss. And after that, set to take profit at least in 3 times bigger than your risk. Why it's important to take profit in many times bigger? Because it's okay that sometimes you will have stop losses, and to be profitable mathematically in long term, you need to have risk reward at least 1 to 3. It's the minimum which you need to have. For a start, I recommend to you, when you are a fresher, how I recommend to you, you should use 1 to 3, and you should make, for example, at least 50 entries. After that 50 entries, you analyze it. And you can see that, for example, in 40 entries, 80% cases, price could give you 1 to 5, and that's why after that you switch your goal target 1 to 5. I recommend to use mathematical take profit because sometimes it's really hard to predict to which level price will rise. That's why best is to use mathematical take profit. For a start, when you start, you use 1 to 3, 1 to 4, 1 to 5. When you will understand, when you will feel the market, you will be able to hold a position for some long term, for midterm. For intraday, 1 to 3, 1 to 5, it's really awesome. It's awesome to have such entries. Okay. Once more, how it works. How do I trade intraday mirror levels? First, I have some key level from which price bounced. For example, like here, price bounced from this level, made relow. When price made relow, it makes level more important, more powerful. After that, when price come back to this level, what makes it powerful, stronger? When price before break it, make a pullbacks, and after that break it. For me, it is the best signal when I see it. For me, it's really the best and the most accurate, because before price broke it, big players showed that there is something. Someone holds stop losses, someone hold positions, and market react on it. For me, it's bad. For me, it's a best signal that's everything good. And after that, on a pullback, price do pullback. When price break down, makes breakout, I set buy stop with stop loss here, and when price come back, we have a position. Or price can break down key level, come back, I set buy limit near key level. If price do retest, which it do in 80% cases, I have buy position. Or price made false breakout and price 2-3 pips above key level, I also can open a position. That's why one more, how you can open a position. When price broke down key level, when price below key level, you set buy stop. I would like to show it again for you. Example, we have key level from which price bounced. We have key level from which price bounced many times. Bounced, and for example, before break it, price also bounced. We have at this moment mirror level intraday. It is the best. Signal strategy which I used. We can open entry in next cases. First, when price need to do a pullback. First, when price do a little break of this key level, you set buy stop above key level and set stop loss below tail, or use mathematical stop loss. For example, for oil, if you trade intraday, it will be 15-20 pips. For gold, also 15-20 pips. For Euro USD, for British pound, for currency pairs, it could be 10 pips sometimes. For currency pairs, I recommend to use 20% of average daily move, 15-20%. About average daily move, you can check it on this Forex index investing.com tools Forex volatility calculator. You should use 2 weeks here.